Good afternoon. This is Jay Kraft with the Facebook group Bolorama Pickers Lounge coming at you live. Today we are going to be tuning in to the eBay Shareholder Q4 2019 phone call, the shareholder call. I have it prepped and loaded up in the background right now, but I cannot pass the audio through because they have a little bit of hold music before the stream actually starts. And what that means is that if I play that hold music, they'll copy strike my video, even if it's just hold music. It's a little ridiculous, I know, but I'm going to get some of the stuff set up on my end to be able to appropriately monitor the stream. Thank you so much for joining me today. Those of you who don't know what we're going to be doing, we're going to be listening to how badly eBay did over Q4 of last year. And I've already looked over the financials. It is bad. It is as bad as I had expected it to be. Gross merchandise volume is down 5%. It is down. Overall, they're seeing, I believe, like a 2% reduction as far as revenue for the company as a whole. But we're going to be listening in. I'm just waiting for that music to end, and then I'm probably going to get my mug off the screen, and we're just going to tune into the call and flip through the slides for you guys. Hope everyone is doing well today. If it's your first time tuning into our channel, you heard about this because of specifically the stream today, feel free to visit bolorama.com to learn about all the resources that we offer resellers. Whether you're a small-time reseller or a large-time reseller, there's plenty of great stuff to take a look at, and lots of it is free as well. So we have free resources available to you. Man, that thumbnail is not looking great either. Let me get this on silent. Guys, we're 1 minute away from getting everything started up, just so I can give you guys some highlights really quick, just so we can see where everything is at. Revenue was $2.8 billion, down 2% on an as-reported basis, remaining flat on the foreign exchange, the FX neutral basis. Gross merchandise volume was at $23.3 billion, down 5% on an as-reported basis and down 4% on an FX neutral basis. Active buyers grew 2% across eBay's platform, total of 183 million global buyers, which seems a bit of a lofty point to be making there. It doesn't really help much. If anything, it hurts the case. You telling me that are we starting? Nope, still got music going. Seems a little bit of a lofty statement to be making. More buyers, yet there's less money going through. Hello to you, Beth. Good to see you this afternoon. Maui Delights, hello, happy to see you. Money from Mars, I am here. Christopher Rademacher, hello to you as well. Thank you guys for tuning in. It's going to be a little bit of here we go.
Standing by, and welcome to the eBay Q4 2019 earnings call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. If you require any further assistance, please press star 0. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, Joe Bellante, Vice President of Investor Relations. Thank you. Please go ahead.
Good afternoon. Thank you for joining us, and welcome to eBay's earnings release conference call for the fourth quarter of 2019. Joining me today on the call are Scott Schenkel, our Interim Chief Executive Officer, and Andy Kring, our Interim Chief Financial Officer. We're providing a slide presentation to accompany Andy's commentary during the call, which is available through the Investor Relations section of the eBay website at investors.ebayinc.com. Before we begin, I'd like to remind you that during the course of this conference call, we will discuss some non-GAAP measures related to our performance. You can find the reconciliation of these measures to the nearest comparable GAAP measures in the slide presentation accompanying this conference call. Additionally, all revenue and GMV growth rates mentioned in Scott and Andy's remarks represent FX neutral year-over-year comparisons, unless they indicate otherwise. In this conference call, management will make forward-looking statements including, without limitation, statements regarding our future performance and expected financial results. These forward-looking statements involve known and unknown risks and uncertainties, and our actual results may differ materially from our forecasts for a variety of reasons. You can find more information about risks, uncertainties, and other factors that could affect our operating results in our most recent periodic reports on Form 10-K and Form 10-Q and our earnings release from earlier today. You should not rely on any forward-looking statements. All information in this presentation is as of January 28, 2020, and we do not intend and undertake no duty to update this information. With that, let me turn the call over to Scott.
Thanks, Joe. Good afternoon, everyone. As I mentioned last quarter, our focus was to deliver our Q4 and full year commitments, execute on our growth initiatives of managed payments and advertising, improve the buyer experience and seller capabilities, and make progress on our portfolio and operational reviews. For 20 and beyond, we would assess how to deliver for our buyers and sellers while ensuring we focus investments to serve our customers and shareholders. Let me walk you through each of these in more detail. Specific to our Q4 commitments, volume was in line with our expectations, down 4%, while organic revenue was at the high end of our guide, up 1%. Margin was strong at over 29%, inclusive of our ongoing investment in managed payments. Non-GAAP EPS was 81 cents, up 15%, substantially better than expected. In addition, we reached a deal to sell StubHub to Viagogo for $4.05 billion, while following a disciplined process that led to a favorable valuation. For the full year 2019, GMV was down 2%, while organic revenue growth was 3%, at the high end of our January outlook. Non-GAAP earnings per share grew double digits each quarter and was above our guidance. And we drove strong productivity, allowing us to reinvest into managed payments while delivering 1 point of margin accretion. Additionally, as part of our operating review, we announced plans to further reduce expenses to reinvest in growth initiatives and improve profitability. The net of these actions is expected to yield at least 2 points of margin accretion over the next 3 years. Finally, we returned $5.5 billion to shareholders through share buybacks and our first ever dividend. Since separating from PayPal, we have repurchased approximately 35% of shares outstanding, net of dilution. For the year, GMV declined primarily due to 2 headwinds. First, we indicated that we would reduce marketing that was not activating buyers with high lifetime values. While reducing near-term GMV and buyer growth, this also drove a higher take rate and better profitability. The second was the implementation by U.S. states of internet sales tax. This rollout happened faster than anticipated and affected small businesses and consumer sellers, requiring marketplaces to collect and remit on their behalf. We expect this headwind to continue until we lap a fully rolled out U.S. internet sales tax landscape. We remain hopeful and are advocating that the U.S. will take a national approach to simplify compliance requirements and reduce the burden on small businesses. While dealing with those volume headwinds, organic revenue grew 5 points faster than GMV, much of which came from our growth initiatives, managed payments, and advertising. Regarding managed payments, we continue to make great progress on our journey to transform our ecosystem. Since launch, we have processed more than $2 billion of GMV for almost 25,000 sellers on our payment rails. While our pricing has been discounted to reward early participation, to date, sellers have saved almost $10 million in fees, and they have more options on how and when they get paid. As we exited the year, our U.S. volume approached the limit permitted under the operating agreement, while in Germany we ramped from 0 to 3%, faster than our U.S. ramp. We remain confident in realizing an incremental $2 billion in revenue and $500 million of operating income in 2022. Advertising continues to drive revenue growth. In Q4, promoted listings delivered $136 million of revenue, up 75%. Over 1.1 million sellers promoted more than 320 million listings in the quarter. For the year, promoted listings revenue doubled and helped us reach our plan of more than $700 million in total advertising. While we have started to lap significant acceleration from a year ago, we still expect double-digit advertising revenue growth going forward. This performance was supported by deeper integration into listing flows and the Seller Hub, which increased adoption. In addition, ad conversion was up due to improved algorithms, which utilize structured data to enhance search ranking. We remain on track with our plan to build a $1 billion advertising business. Over the course of 2019, we improved the buyer experience by increasing the collection and use of structured data. We collected more aspect data from sellers in fashion and home categories by making it easier to see what buyers were searching for in the listings flows and the seller tools. When sellers uploaded that data, these structured data-enriched listings make search better and convert faster. This additional data contributed to improved merchandising algorithms and promoted listing relevance in search. We also improved our Seller Hub over the course of the year. In addition to the TerraPeak integration, one feature we launched was seller-initiated offers, where a seller can engage individual buyers with better deals. This feature has grown to over 1 million offers per day, with pricing options and an easy-to-use automated experience. We are pleased that we delivered on our 2019 commitments. As we enter 2020, our priorities are clear. We will continue to drive revenue through our growth initiatives, deliver more seller tools, improve the buyer experience by leveraging our structured data foundation while driving more margin expansion. Managed payments will reach an important milestone in July when our operating agreement expires, and we will be ready to rapidly scale additional countries and corridors while delivering a better customer experience. For advertising, we will provide sellers more tools to optimize their ad spend. We expect this will increase conversion and improve pricing without adversely impacting the buyer experience. For sellers, we will expand insights and data in the Seller Hub while improving our guidance capabilities. We will also remove friction from the consumer selling experience, particularly on mobile. For buyers, we will build better vertical capabilities that will start in a few categories and scale across the platform, with features such as payments for high-dollar items with escrow and clear item condition definitions. We will also focus on improving buyer trust through increased shipment tracking in our international markets. All of these experiences will leverage aspect data, which will lead to benefits in search recall, ranking, and relevance. We also plan to collect more data in electronics, fashion, and home and garden to increase the overall aspect data population. While delivering on these better experiences for customers, we will drive further margin expansion by simplifying our structure, controlling costs, and reducing ineffective marketing spend. For buyer-focused marketing, we will rebalance spending between acquisition, retention, and frequency. Finally, there are two topics I would like to proactively address. First, regarding the portfolio, our primary objective is to maximize shareholder value. We evaluate each business in our portfolio for long-term synergies and value creation opportunities. When we take action, like with StubHub, we utilize a consistent set of guiding principles, including value to eBay shareholders, speed of execution, certainty to close, and operational simplicity. Our board and leadership team continue to operate with these guiding principles, and we anticipate having an update to share about our classifieds business by the middle of this year. We appreciate that our employees continue to maintain focus in a time of uncertainty about what the future structure of classifieds might be, while everyone is excited about the opportunities it could bring. Second, regarding the CEO search, the board is actively conducting a process with the support of a search firm and is considering internal and external candidates. In the interim, the leadership team has the full support of the board, and we continue to make changes to better serve our customers, employees, and shareholders. Over the past few months, we have reprioritized our product roadmap, reallocated marketing investments, and simplified our structure. By elevating our largest on-platform marketplaces regions and global marketing organization to the executive leadership team, we are increasing focus on the marketplace business, which is where we see the biggest value creation opportunity. Our top 2020 priorities remain clear: deliver our growth initiatives, provide more seller tools, improve buyer experiences, leverage our structured data foundation, all while delivering margin expansion. We believe these changes will result in a better balance of sustainable growth and profitability that maximizes long-term shareholder value. Our teams are excited about the challenge and look forward to delivering on these commitments. Now let me turn it over to Andy to provide more details on our financial performance. Mr. Crane?
Thank you, Scott. I will begin my prepared remarks with our Q4 financial highlights, starting on slide 4 of the earnings presentation. In Q4, we generated $2.8 billion of revenue, 81 cents of non-GAAP EPS, and $672 million of free cash flow, while returning $1.1 billion to shareholders through share repurchases and cash dividends. Moving to active buyers on slide 5. We have 183 million active buyers, representing 2% year-on-year growth. This is a 2-point deceleration from Q3, driven in part by reduced marketing spend that was driving growth in buyers with lower engagement and a higher churn than we expected. Moving to slide 6. In Q4, we enabled $23.3 billion of GMV, down 4%, decelerating 2 points versus the prior quarter. In the U.S., we generated $8.9 billion, down 8%, while we delivered $14.4 billion internationally, down 1%. Moving to revenue on slide 7, we generated net revenues of $2.8 billion, up 1% organically. We delivered $2.3 billion of transaction revenue, up 1%, and $539 million of marketing services and other revenue, down 5%, inclusive of a 7-point headwind from the sale of Brands for Friends. Turning to slide 8. Our marketplace platform GMV was down 4% in Q4, decelerating 2 points versus the prior quarter. U.S. GMV was down 9%, driven by a 6-point impact from internet sales tax and 4 points from the continued reduction and redistribution of marketing spend. The impact of internet sales tax in Q4 was 3 points worse than Q3, as 11 more states, including California and Texas, went live in October. International GMV was down 1%, decelerating 2 points versus Q3, primarily driven by lower consumer confidence in the UK from uncertainty surrounding Brexit and a reduced on-platform marketing spend. Total marketplaces revenue was $2.2 billion, down 1%, decelerating 2 points from the prior quarter. Transaction revenue grew 1%, a 3-point deceleration. The gap between revenue and GMV growth continues. The 5-point gap in Q4 was driven by 3 factors. Over 3 points from promoted listings, nearly 1 point from category mix effects, and nearly another point from the continued growth in managed payments. Looking forward, we expect the contribution of payments revenue to significantly increase in the second half of 2020, leading to revenue growth remaining at higher levels than GMV growth until fully scaled. Marketing services and other revenue was down 17%, decelerating 4 points versus Q3. The year-on-year decline is driven by 13 points from the sale of Brands for Friends and the continued reduction of third-party ads. Marketplace segment margin was 32%, up nearly 1 point year-on-year, primarily due to reduced marketing and continued cost leverage, partially offset by our investment in managed payments. For the full year, the marketplace platform generated $85.5 billion of GMV, down 2%, and $8.6 billion of revenue, up 2%. Turning to slide 9, StubHub GMV was down 5%, decelerating 5 points from Q3, mostly from the weak event landscape in concerts and theater. StubHub revenue grew 2% year-on-year versus 5% in Q3. Transaction revenue was down 2%, a 2-point deceleration driven by volume, partially offset by a higher take rate from pricing changes and event mix. MS&O has more than tripled year-on-year for the 4th straight quarter, delivering $16 million of revenue in Q4. Most of StubHub's MS&O revenue is first-party sales, which provides buyers access to unique and exclusive inventory and insurance for purchase tickets. StubHub's segment margin was 22%, down nearly 4 points, primarily driven by investments in our first-party business and consulting costs, partially offset by lower marketing spend. For the full year, StubHub delivered $4.7 billion of GMV, down 1%, and $1.1 billion in revenue, growing 4%. Moving to slide 10, in Q4, Classifieds revenue grew 6%, decelerating 2 points. Our German businesses continued strong double-digit growth, driven by our market-leading horizontal, eBay Kleinanzeigen, and our vertical motors platform, Mobile. In addition, we are delivering strong growth in verticals across the portfolio. The quarter-on-quarter deceleration is primarily driven by continued headwinds in horizontal display advertising across our markets outside of Germany. Segment margin for classifieds was 43%, down 1 point year-on-year. For the full year, classifieds generated nearly $1.1 billion of revenue, up 9% versus the prior year. Turning to slide 11 and major cost drivers. In Q4, we delivered non-GAAP operating margin of 29.3%. This is up 10 basis points year-on-year, inclusive of a full point of investment in managed payments and additional pressure from the growth in our first-party inventory programs in Korea and StubHub, more than offset by reductions in marketing and the divestiture of Brands for Friends. Cost of revenue is up 160 basis points year-on-year as a percentage of revenue, driven by scaling managed payments and our first-party inventory programs, partially offset by the divestiture of Brands for Friends. Q4 sales and marketing expense was down over 3 points versus the prior year, primarily driven by a double-digit reduction in marketing and promotional spend in our marketplace on-platform business, while increasing year-over-year investments in our marketplace off-platform businesses. Product development costs were up 70 basis points from investments in managed payments and in classifieds to expand our vertical offering. G&A was up 1 point, mostly driven by portfolio and operating review costs and our continued investment in managed payments. For the year, operating margin was 28.2%, up 1 point and in line with our original 2019 full-year guidance. Turning to EPS on slide 12. In Q4, we delivered 81 cents of non-GAAP EPS, up 15% versus the prior year, our 7th consecutive quarter of double-digit non-GAAP EPS expansion. The non-GAAP EPS growth was driven primarily by our share repurchase program, a lower tax rate, and operating efficiencies, partially offset by FX and our investment in managed payments. Favorability versus our guidance in October was mostly driven by continued cost control and an in-period tax benefit. For the year, we delivered 22% growth in non-GAAP EPS, primarily driven by our share repurchase program and expanding operating leverage. GAAP EPS for the quarter was 69 cents, down 14% versus last year. The decrease in GAAP EPS is mostly driven by a higher tax rate as we lap a 2018 deferred tax adjustment, partially offset by gains associated with the Audion warrant and share repurchases. As always, you can find the detailed reconciliation of GAAP to non-GAAP financial measures in our press release and earnings presentation. Moving to slide 13. In Q4, we generated $672 million of free cash flow, down 39%, mostly driven by a timing of both working capital and cash taxes. We had another strong year of cash generation, finishing 2019 with nearly $2.6 billion of free cash flow, a 27% increase year-on-year, driven by lower cash taxes, improved working capital, and lower capital expenditures. Moving to slide 14. Our capital allocation strategy and key tenets and targets have not changed. For the quarter, we ended with cash and investments of $3.8 billion and debt of $7.8 billion. In Q4, we repurchased nearly 28 million shares at an average price of $36.19 per share, amounting to $1 billion. We ended the year with $2.2 billion of share repurchase authorization remaining. Turning to slide 15. In July, we shared progress on our capital allocation plan for 2019. Looking at that same view today, we have delivered against all the markers we set out for the year. We initiated and executed our first ever dividend. We completed $5 billion in share repurchases. We ended the year with cash of $3.8 billion, above our year-end target of $3.5 billion, driven by our overperformance on free cash flow. And we maintained our BBB rating while delivering on our stated ratio targets of 1.5 times net debt and below 3 times gross debt to EBITDA. Moving to full year guidance on slide 16, the 2020 guidance we are providing assumes our current portfolio, including StubHub, is in place for the entire year. We will provide updates as appropriate moving forward. I also want to provide a little more context on the impact of internet sales tax. Throughout 2019, as states implemented marketplace responsibility to collect sales tax, our sellers and our volume were negatively impacted. In each state, we saw an immediate drop in volume, followed by relatively stable growth rates in the months that followed. We expect growth to recover as we lap the launch dates in affected states. And early data from the states that launched in January of 2019 shows that recovery. Given these dynamics, we expect the negative impact of internet sales tax to be modestly larger in the first half, with more states launching, and then start to taper off in the second half as we lap quarters where a larger number of states went live in 2019. Please refer to the appendix of the earnings deck for additional details on the impact of internet sales tax on our U.S. marketplace business throughout 2019, including the timing of when states launched. With that as background, we are projecting 2020 revenue between $10.72 and $10.92 billion, growing 1 to 3% on an organic FX neutral basis, and -1 to +1% on an as-reported basis. We anticipate 2 points of growth to come from the continued ramp of managed payments and 1 point from advertising, which we expect to be approximately $800 million in 2020. Underlying this guidance, we expect marketplace year-over-year volume to decline low single digits, consistent with our 2019 performance, as an incremental point of internet sales tax pressure will be offset with improvements in conversion. We expect StubHub to deliver low single-digit revenue growth, and in classifieds, we expect similar top-line growth to 2019. We anticipate the stronger U.S. dollar and the disposition of Brands for Friends to negatively impact 2020 revenue by approximately $200 million compared to 2019. We plan to deliver additional operating margin expansion while we invest in the long-term growth of our business. We expect margin of 28.5 to 29.5% for the year, which at the midpoint represents an increase of 80 basis points versus 2019. This margin expansion will be driven by continued marketing optimization, focused product and technology investments, best-in-class corporate functional costs, and more effective procurement, partially offset by approximately 1 point from our investment in managed payments and currency headwinds. We expect non-GAAP effective tax rate in the range of 15.5 to 17.5%. With regards to capital allocation, our guidance implies approximately $1.5 billion of share repurchases in 2020, inclusive of dilution offset. In January, our board approved a 14% increase to our quarterly dividend, raising it to 16 cents per share. The dividend will be payable to shareholders of record as of March 2nd, with a payment date of March 20th. Our board has also approved an additional share repurchase authorization of $5 billion with no expiration. We have not made any assumptions in this guidance for the use of StubHub proceeds. Should the deal close in Q1 as anticipated, you can expect that we will deploy that cash in a manner consistent with our capital allocation tenets. We are projecting non-GAAP EPS of $2.95 to $3.05 per share, up 4 to 8%. This includes the impact of modest top-line growth, additional margin leverage, and the ongoing benefit of our share repurchase program. Growth is partially offset by our investment in managed payments and approximately 7 points from the combination of a stronger U.S. dollar, less interest income based on lower cash balances, and a higher tax rate as certain benefits impacting 2019 won't repeat. We expect free cash flow of $2.2 to $2.4 billion, which assumes capital expenditures in the range of 4 to 6%. Full-year GAAP EPS is projected to be $2.18 to $2.28 per share. Turning to slide 17. For Q1, we are projecting revenue between $2.55 and $2.60 billion, growing -1% to +1% on an organic FX neutral basis. It's important to note that given the second half ramp of managed payments following the end of the operating agreement and the lapping of the internet sales tax headwind, that we expect our second half performance will reflect higher growth rates for volume and revenue compared to the first half. We expect non-GAAP EPS of 70 to 73 cents per share, representing 4 to 9% growth. EPS growth is driven primarily by the combined benefit of lower share count and operational growth, partially offset by investments in managed payments. In addition, there are 4 points of headwinds from the combination of a stronger U.S. dollar and less interest income based on lower cash balances, partially offset by a lower non-GAAP tax rate. We are expecting GAAP EPS in the range of 50 to 53 cents per share in Q1. In summary, while 2019 volume growth was challenged, we delivered on our financial commitments and our growth initiatives while laying a strong foundation for 2020 and beyond. We ramped managed payments according to plan and scaled better buyer and seller experiences, including launching in a second market. We delivered strong advertising revenue, including triple digits within promoted listings. In 2019, we delivered a point of margin expansion despite pressure from lower volume and our investment in managed payments. We executed a comprehensive operating review and are on track to deliver at least an additional 2 points of margin expansion over the next 3 years. We continued to return capital to shareholders, initiating our first ever dividend, and we repurchased $5 billion of our stock. We continue to make progress on our portfolio review, divesting Brands for Friends and reaching an agreement to sell StubHub at a favorable valuation. We've reorganized the leadership and operational teams to deliver better outcomes in our marketplace on-platform business, increasing focus on our customers and speed of decision making. We entered 2020 focused on our top priorities: managed payments, advertising, providing more seller tools, improving buyer experiences, and leveraging our structured data foundation. As we navigate through a period of lower volume growth, our plan is to deliver continued revenue and earnings growth, margin expansion, and a consistent capital allocation strategy to maximize shareholder value. And now we'd be happy to answer your questions. Operator?
To ask a question, please press star 1 on your telephone keypad. The first question comes from Heath Terry of Goldman Sachs. Please go ahead. Your line is open.
Thanks. I was wondering if you could give us just if you could just give us a sense, of the guidance as we look at 2020. Is there a way to kind of disaggregate the impact both of the internet sales tax, which you guys have given us a lot of information on, which I think we all appreciate, but some of your initiatives around focusing more on what you see as being kind of the core eBay revenue or the core eBay businesses and sort of chasing what I think in the past you've kind of described as being less profitable revenue as you look to sort of focus more on sort of the higher value or core eBay experience. Is there a way to disaggregate sort of the impact that's having on guidance or the impact that's having on the growth that you're guiding to for this year? And then as we think about sort of the process around the classified side of the business, you've in the past talked about sort of the complication of pursuing anything less than a full sale of the asset. And I was just wondering, if you could give us a bit of an update on sort of your thoughts around as you've gotten further into this, sort of what would make sense along those lines as well. Thank you.
Sure. Heath, it's Andy. I'll start with a couple of answers on guidance, and then I think Scott will kick in on the classified side. I think what I tried to point out in the script, and as you think about the volume guidance being relatively consistent year to year in the low single digit for marketplaces, it'll have a very different dynamic half to half. The first half of the year with IST really at full ramp will look more like Q4, and the second half of the year will start to accelerate a little bit as we lap out of some of those states. When you elevate up and you look at that on a full year basis, we go from about a little over a point of IST impact in 2019 to something a little over a point of it, or 2 points of impact in 2020. So an additional point of pressure from IST, or 2 full points of negative volume pressure from IST in 20. So that's how to think about that. And then on the less profitable revenue piece, we continue to refine how we allocate the marketing spend. And I think similar to the IST dynamic, it won't be drastically different impact 19 versus 20, where we feel like we'll have roughly a point of negative impact from continuing to refine how we allocate the marketing spend and eliminating some of the lower ROI spend.
Yeah, Heath, on the sale classifieds, look, it's as I think everyone understands, a great business and a wonderful space. We've got, one of the leading, if not the leading asset in the industry. And this is about shareholder value creation. So at this point, I would not exclude any option, although it's unlikely that we would pursue an option of divesting platform by platform, which a lot of people have reached out on. That's not really in I think our best interest or in line with maximizing shareholder value creation. But it's completely doable, and we're looking at all those options. And as I said, expect to have an update on that by mid-year.
Great. Thank you both.
Yep.
Your next question is from Eric Sheridan of UBS. Please go ahead. Your line is open.
Thank you so much for taking the questions. Maybe two, if I can, on the marketing piece. How far along are you on the marketing optimization against your goals of multiple years? You talk about continuing to reduce exposure to the lower ROI channels. Just want to get a better sense of the linearity going forward through 20 and beyond, of how you'll sort of accomplish those goals. And then with the growth headwinds you might be facing in the first half, as you characterize it as a 2-half type year in 2020, any thoughts around leaning into some of the paid marketing channels that are delivering for you, and sort of having a first half, second half component to the marketing expenditures in 2020, or how we should think about that? Thanks so much, guys.
Yeah, Eric, this is Scott. I'd characterize the 2020 marketing costs as coming down approximately in line with the same as we came down in 2019. And so we don't expect material headwinds in growth, but it will be reducing our underlying marketing spend. But within that, for sure, we'll be reallocating, as I mentioned, and that would include reallocating into paid search to help growth where we think it makes the most sense and where the returns make sense as well.
Do we get an answer?
Next question.
Your next question comes from Colin Sebastian of Bard. Please go ahead. Your line is open.
Thank you. First, I guess on the pricing experiment with sneakers, wondering what you're seeing there in terms of listing activity, and what would determine if that's a model that could work in other categories outside of shoes. And then maybe as a follow-up on the marketing spend, but more specifically on the sequential plateauing of active buyers, since I think in past quarters you guys have indicated that this is an important KPI in terms of the health of the platform overall and potential future growth. Are there any specific efforts geared at re-accelerating the number of active buyers? Thank you.
Hey, first on sneakers. Yeah, look, it's an interesting question, and certainly interesting in terms of what we did in December. As you might know, our online marketplace has one of the widest and most unique set of inventory of sneakers out there. And we have a history of experimenting with different types of selling promotions across different markets. And in this case, what we announced in December was a sneakers promotion. How does the monetization change? As you think about, no final value fees in sneakers over $100, but there's other dynamics at play here, including first-party ads and other dynamics where we're trying to look at conversion and accelerated active buyers in those categories. And so to date, we've seen some added benefits, not only with additional promoted listings, but also with additional listings by sellers, activity by buyers, and GMB. And so as we look at that and then consider what we're going to do with the product, it gets pretty interesting from here. And we'll see where we go from here. But right now, it's a very small scale, but very interesting experiment.
Yeah, I think the only thing I'd add to that, Scott, to your point, it's one category in two markets, but it's a way we can really highlight the breadth and depth of the inventory we have across this competitive vertical. So feel good about that. And then active buyers?
Yeah, look, on active buyers, couple of thoughts. First off, active buyers is always important. We've indexed recently and overweighted on getting active buyers, new active buyers into this ecosystem. And that, as we've been highlighting over the course of 2019, that's favored active buyer growth, particularly with new and what we call new and reactivated buyers. As we look into 2019 or 20, we'll continue investing in new buyers, but we're going to migrate some of that spend into getting those new buyers that we brought into the ecosystem over the last 4 quarters and get them to try and buy more. And so it's going to be more about generating the GMV and the GMB from them while we look at and continue to explore ways to expand the GMB per buyer in our retained buyer base, which, by the way, in Q4 was very stable, which is, I think, great news. And as we pivot into next year, you can expect us to look a little bit less towards bringing a whole bunch of new buyers in, but continuing some investments there, but expanding more into converting those buyers that we brought in the last year and our retained buyer base as well.
All right, that's helpful. Thank you.
Yeah, thanks.
Your next question is from Ross Sandler of Barclays. Please go ahead. Your line is open.
Hey, guys. Just 2 questions. So thanks for the detail on slide 20 on the IST. So are you basically saying that if we look at these 4 quarters, that the improvement that you've seen ex-IST, is that just lapping the couponing initiatives, or are there other things that you're working on that are driving that uptick from down 6 to only down 3 in recent quarters? And then as we look forward, your guidance assumes that the year starts kind of flat in 2020, and the back half is going to be up about 4%. So is that GMV growth picking up, or is that from payments kicking in second half? Any color there on those two? That'd be great.
Yeah, I think on the half versus half, it's both. It's certainly an increased lift from payments. As I said, we'll get roughly 2 points of revenue growth from payments in the year. And remember, we're capped through July on what we can do in the U.S. and we'll quickly get to that cap in Germany here in the first and second quarter. So the majority of that 2 points of revenue growth is going to be coming in the second half. And then and in GMV as well, you'll have the combined impact of the conversion improvements and initiatives we're working on, some of the things that Scott mentioned, in addition to a point of improvement half over half just from lapping out of IST.
Thanks, Ross.
Your next question comes from Stephen Ju of Credit Suisse. Please go ahead. Your line is open.
Okay, thank you. So, Scott, just wanted to understand how you're thinking on payments may be evolving now that you have another quarter of ops under your in the rear view. So I think in the past, you guys had articulated a hard fork scenario when the contract comes off to, I guess, now more of a gradual transition. So has that thinking changed in terms of the speed at which you're willing to go, especially now that you're running up against the guardrails in terms of what you can do? Second, any directional commentary you can offer about what percent of your sellers have bought into using promoted listings, and what that buy-in percent may look like in the newer markets in the West versus some of the, I guess, the older markets like Korea, where this has been live for some time now. Thanks.
Yeah, a couple thoughts on payments. First, I view our payments evolution as going right on track right now, and the gradualness is only in the near term, in the sense that we're guardrailed with what we can do between now and July. Once we're independent of the operating agreement with PayPal, we will go hard at not only the two markets that we're in and expand the number of sellers and the GMV that's covered in the ecosystem in both U.S. and Germany, but we'll expand it under the markets and other corridors. And so we're on track, if not better than we thought, as we look towards the second half of the year. With regards to promoted listings, maybe I'll let Andy, if he has any numbers, weigh in on that. But on the promoted listings within the U.S., I mean, what you see, within the on-platform marketplaces business, is roughly 30% of listings are actually getting some form of promoted listings utilization. And as we look forward, we'll learn from our Korea business, which has a much higher percentage, but a completely different take rate. And so, what we've said over time is that as we scale promoted listings and modify how we think about not only the user experience, but also the monetization of those assets, to make sure that it's a valuable thing for sellers, and they view it as marketing expense versus just a take rate and a requirement. And I would expect us to continue to iterate that as we move forward within the plans that we've laid out.
And in terms of number of sellers or percentage of sellers, through the year, we grew the number of sellers promoting items by over 80%. We exited the year that was more than 1.1 million sellers, and represents more than $320 million listings in Q4. 320 million, sorry.
Thanks, Steven.
Your next question comes from Edward Yruma of KeyBanc Capital Markets. Please go ahead. Your line is open.
Hey, good evening. Thanks for taking the question. I guess first on payments, are you noticing any change in conversion on when a seller is using payments and whether they're seeing any negative impact from switching over? And then second, maybe this is a follow-up to one of the earlier questions. Scott, you had talked about really embracing authentically eBay, and I guess just trying to think about some of the verticals that you've been very successful at historically. Any sense that you'll be able to kind of restart maybe a more favorable growth dynamic in those verticals through greater focus? Thank you.
Yeah, so on payments conversion impact, no, it's not down. I think that's just sort of a simple answer. What you do see with payments is different user behavior, as you would imagine. Buyers now have more alternatives, and sellers have a series of tools from which how to manage their payments and connect their payments with their listing activity, which makes it easier for them. And so I think on both sides of the equation, this is a net positive, and certainly the conversion's fine. On authentically eBay, look, the way I alluded to it last time, and what I would point you to in the script from today and the points that I made, is as we think about not only how we've prioritized the product plans for 2020, but also as we think about which verticals that we experiment in. And again, this is based on leveraging the structured data work that we've done, the aspects that we've expanded upon recently, and as we look towards 2020 and beyond, really indexing higher on verticals that, that are, more authentically eBay, that people think of. And as much as it's that, it's about also the inventory that they think of us in. When we talk about vintage, collectibles, interesting items, et cetera, people think of us, and we just have to be more relevant, not only in how we show up on our search results, but how that inventory is searchable and findable on the site in a way that doesn't undermine new buyers coming into the ecosystem, as we talked about a lot last year and prior, and then most importantly, over time, also indexing on brands. So more to come on that as we move forward. But for right now, I think Pete and the team have done an excellent job over the course of the planning horizon and setting us up for a 20 plan that is very clearly focused on vertical categories, along with Jordan and the other regional country leaders, to really focus on where we think we can win.
Great. Thanks so much.
Your next question comes from Dan Salmon of BMO Capital Markets. Please go ahead. Your line is open.
Hey, guys. Good afternoon. Maybe just a quick follow-up on the display advertising headwinds and classifieds. If you could just expand on that a little bit, Scott, and maybe in particular why you're not seeing it in Germany. And then second, just thanks for the update as well on the CEO search. I may have missed it, but I don't think you put a timeline on that one, but just curious to see how you think about how we might expect that to play out while the strategic review continues as well. Thanks.
Yeah, absolutely. Look, on the CEO search timeline, we didn't lay out a plan or a timeline, but just to reemphasize, the board and a subcommittee of the board is working very actively to find an interview and find the best possible candidate. With regards to headwinds and classifieds, I think it's important to note that there's a combination of factors going on, particularly in our horizontal platform businesses, and each one has it just to a different degree. In particular, display ads are impacted by what Andy called out, which is the shift to mobile devices, and that's been happening over time, and it's continuing, and in some countries accelerating. And the second is kind of the downstream impact of a lot of the changes within the privacy laws, as well as what Google's done, and that limits to some extent both the market of display ads and the effectiveness, as well as then what's showing up on our site. And I think that's pretty consistent across other players in the industry. That said, look, as we head towards 2020 and beyond, I think that'll normalize, and I think the teams have done an excellent job, as Andy called out, particularly in Kleinanzeigen, as well as our automotive verticals, to continue to expand and grow. And so I don't see this as a structural long-term concern. It's just more of something that we've got to work through, not dissimilar to the internet sales tax.
Okay, great. Thanks.
Thanks, Sam.
Your next question comes from Brian Fitzgerald of Wells Fargo. Please go ahead. Your line is open.
Thanks, guys. Maybe related to Stephen's question, second question, but asked a little differently. With promoted listings, revenue up 32% sequentially, but actual number of promoted listings, I think, was less than 10% growth there. Can you walk us through what's the strongest driver there? Is it higher bids? Is it improved conversions? And how much runway for pricings and conversions can we see there going forward? Thanks.
Yeah, Brian, it's a great question. I think you answered it. It's a combination of conversion. I mentioned that in my script, and Andy alluded to it as well, that a number of things that we've been doing in the ecosystem under the underlying structured data improvements and aspects that we've been collecting has given us a capability to then serve those ads up with more certainty about what people are looking for and what might fit on that page to improve conversion. The other side of it, then obviously prices fluctuate and have gotten a little bit better. And then I think finally, you're going to see us continue to look at where and how we place these ads to make sure that they're accretive to the user experience. Thanks, Brian.
Thanks, Scott.
Yep.
Your next question comes from Justin Post of Bank of America. Please go ahead. Your line is open.
Great. A couple questions. First, on international, it's decelerated. Obviously, sales taxes aren't an issue. Are there any countries that you'd call out that are doing better or worse? And what are your big product initiatives to maybe help with the users and the growth there that you'd call out for international markets? And the second question is obviously you believe eBay stock's a good value here, been aggressive with buybacks and helping grow earnings. Is core eBay at all part of the strategic review? Are you looking at some of your options there? Thank you.
Thanks, Justin. Hey, internationally, I think the two countries to call out are the UK and Korea for different reasons. The UK is primarily macroeconomic. We've been tracking our performance relatively well with what's happening on a market basis. and just the uncertainty around Brexit has put pressure on the growth rates in the UK. And then Korea, as we've mentioned for several quarters, though it's been stable over the last quarter, with the continued pressure from lower margin and to a tougher competitive couponing environment in Korea.
Yeah, I mean, as we look at helping international, I think you got to pivot to on and off platform. And if you look at off platform, first off, Japan and Turkey continue to grow really well. Korea, as Annie mentioned, is relatively stable in a very tough macro situation, and keeping in mind that they actually make money in that market, whereas I don't think anyone else does. And that team is doing a fantastic job of iterating on how to deliver growth in a market that has those dynamics. And I call out two things for them. One may be more applicable to the rest of the platform, which is loyalty programs. They've done an excellent job with Smile Club and other parts of the loyalty program to really capture over 2 million Koreans at this point that are part of our paid loyalty program that bring great inventory, a wonderful payments capability with credit included, and first-party inventory listings, and a kind of capability to bring great value there, as well as a very retail-centric first-party set of inventory that's offered on the platform, and that's a bigger and bigger part of that part of the business every month. That team's done an excellent job, and so while they may not be growing at the same rate as some of the others that lose $1 billion a year, they're doing an excellent job at managing and driving profitable growth, even if it's lower than the overall. And if you look at the on-platform businesses, there's a combination by market. We've talked about German DE Plus, where we've got a loyalty program there, and we certainly learned and have incorporated aspects from Korea into the German platform. We have the same in the UK and the same in the US, and we continue to iterate around those. But I wouldn't point to any one per se, other than maybe in the UK, and we alluded to this in the past, but what you'll see in 2020 is a very unique integration with Royal Mail that's going to allow tracking, which doesn't happen today on Royal Mail. It's going to allow tracking on eBay. That'll be unique to eBay. And so consumers in the UK will be able to see where their packages are and improve their trust and confidence in receiving and when they're going to receive their item. But there's a lot of different ones by country, but generally speaking, the larger on-platform dynamics that I talked about will apply to most of those countries across the board.
And then on
Great. And go ahead.
Yeah. So look, we do feel like the stock is a good buy, which is why we continue to be aggressive with the buyback. And in terms of core eBay being part of the review, it's
everything's part of the review. The way we approach it is exactly as we've talked to you about, which is we're disciplined in how we look at it, and we continue to iterate with the board. So I wouldn't call anything specific out at this point, but we look at everything.
Great. Thank you.
Operator, we for one more.
Certainly. Your last question will be from Brian Nowak of Morgan Stanley. Please go ahead. Your line is open.
Great. Thanks for taking my question. I have two. Just the first one on 2020 GMV. I think you talked about how you're going to have the IST challenges offset by higher conversion. Maybe talk to us about some of the qualitative changes or the product improvements that you see driving that higher conversion throughout 2020. And then back to the 4Q flat buyer number, you mentioned how there was some higher churn than expected. Can you just sort of talk to us about what you saw in the consumers that were churning? Was it an inventory issue? Was it payment friction? So what did you observe that was causing that higher churn, and how do you fix that going into 2020? Thanks.
I'll start with the buyer number, Brian. It's actually up 2% year on year. So just to be clear, it's 83 million buyers. The churn, I don't think it's anything special in Q4. It's more a continuation of what we saw in Q3, and it's really following the increase in marketing we spent, the buyer-driven marketing spend that we had in the second half of last year, first half of this year, where we attempted to reactivate buyers and attract new buyers. And what we saw with those cohorts is visited less frequently, spent less, and were churning out at a higher rate. And that became the CLV and the value of those buyers started to not be worth the marketing dollars we spent on them. So that's why we've been pivoting away from that towards retention and focused on some higher value buyers.
Yeah, with 2020 GMV, the internet sales tax headwinds, really what you see is particularly at higher ASP items, especially in electronics categories, that when people encounter at checkout sales tax, they bounce away. And the good news in that is that they are at least coming back, and we're not losing them other than that transaction. And so what you see is there's a chunk of GMV that's not returning, but it's not getting worse in the states that we've seen so far. And so I don't really see the dynamics there changing. And in the underlying conversion, we've had some minor benefits, but I wouldn't point to one thing above all the others. I think in a marketplace, in an ecosystem like ours, it's imperative to be working on the seller experience and making seller tools and seller dynamics better, as well as the buy side. And I think, broadly speaking, some of the efforts that we did in 2019 as we look at conversion improved, and as we look towards 2020 will improve. We're not pointing to one thing, but it's a series of things to try and improve the overall ecosystem. Thanks for the question, Brian.
This concludes the allotted time for questions. Thank you for your participation. You may now disconnect.
Okay, guys, there we go. That was the entirety of eBay's Q4 shareholder call. If you haven't slapped the like button, please do. These streams are not easy to set up. No one else takes the time to do them, so I'd really appreciate it if you did. If you haven't subscribed yet, please go ahead. We're going to go ahead and open up and start a discussion regarding some of the details of the call right now, and we're going to take a look at some of your comments. If you have any questions regarding that shareholder call, now is a great time to ask them. I took 2 pages of notes. I want to be very clear. We're going to be talking about some key points right now, but the bulk of our discussion, after I've had a chance to not only look at where the market is tomorrow morning, which is going to be a very, very big, very eye-opening thing, because it's not just what I think about it, it's not just what you think about it, it's also what investors think. What does Wells Fargo, Credit Suisse, Citibank, Chase Capital, what do these big brands, and what do other voices within the industry, Fox, CNN, Motley Fool, e-commerce bites, other e-com brands, what are their interpretations regarding this news? I kind of want to hear what the guy from Hard Money has to say about this as well. But there was a lot of information that was covered and a lot of charts. I understand that some of the acronyms are complicated, but we're going to do a deep dive on Sunday once we have a better feel of the impact of this. But today we're just going to talk about a couple of little things that happened. Again, if you have any questions, don't be afraid to ask them. If you haven't subscribed, please do. You'll be here on Sunday. Click that little bell next to the subscribe. You'll get notified when we go live at 4 o'clock Pacific Standard Time, 7 o'clock East Coast Time. Let's take a look at some of these comments. Gray D, thank you for tuning in today. I appreciate all your insightful commentary on our Facebook page. If you haven't joined it yet, go to bolorama.com and click on free resources. It's the easiest way to get to that Facebook. But yeah, he says, how? eBay, you're getting your tails whipped by media, Etsy, Mercari, etc. And I think that it was very interesting that no one actually mentioned the comments made by Wells Fargo last week during the shareholder call. If you remember, when we looked at the Q2 call of 2018, when Elliott Management made their first big play to try and go after the company, a little over a year ago, they'd even spoke out and said, hey, we're not going to take questions on that topic tonight. And I'm surprised that nobody jumped in and said, hey, Wells Fargo looked at you and said, hey, your competitors are doing better than you are. They're growing faster than you are as a whole. This is why we are downgrading the evaluation on your stock. So yeah, they are getting their butt kicked by their competitors. I'm surprised nobody was talking about it. Sherry McD says, I see the trend for this year and will blame the sales tax. I cannot blame the sales tax. I am sorry, because sales taxes affected all e-commerce equally. And I understand what they said as some states came on board, that they saw a reduction in sales and that they're hoping coming into this year that they're going to see sales normalize as internet sales tax becomes standard across the industry. But the reality is internet sales tax is standard across the industry already. You're not going to Amazon, you're not going to Etsy, Posh, Mercari, you're not going to one of those sites and making the purchase right now and not paying sales tax. So we can look at it on a state-by-state basis and say, yes, sales tax has affected negatively buyers in blank state because they just had sales tax added. But the reality is, if you were dead set on buying a pair of Felix Gray glasses and you went to the website and you noticed that you had to pay an 8% sales tax, if that 8% sales tax is across the board on every single site you go to, what's the real reason why people aren't converting on eBay? So, and I don't want to make anyone feel bad for their questions or comments. I want you to know this is an open banter. If you have a disagreement with that ideology, if I go against one of your thoughts, counter me back. I'd love to hear what you think. Okay, this is a two-way discussion here. Next up, we got, my comments are moving a little bit quicker than I can keep up with. Lee James says, holy asterisks, they admitted higher buyer return rates, LOL. I wonder, does eBay encourage it more than the actual sale itself? And we are actually going to be covering the influx of returns and why I personally feel that is happening this Sunday. But yeah, it was an interesting point for them to touch on. Charlie Hustle says, I'm not enjoying myself as a seller on eBay. It takes 10 minutes to what I can do on Mercari in 30 seconds. And yeah, 100% agree with you. The downfall of the seller experience is something that has pained me greatly. This year during eBay Open, before I even registered for the event, there was a questionnaire that I was sent and it said like, hey, what are you most excited about to go see at eBay Open? And one of the questionnaire options read dedicated eBay seller app. And when I went there, I asked and I looked and I was on the phone with concierge the other day and I said, hey, what's going on? It's been 6 months since the event and I'm still not seeing this dedicated seller app. Like we've seen the one that whites out the background, but we haven't seen the dedicated app. And you know what I was told? We're working on it still. And hopefully we're going to get it before Q2 of 2020. I'll have more details as it comes. But if they don't do something to improve the experience for sellers, we're just going to go where it's easiest to sell. Because why am I going to pay more money to sell the exact same item if I can sell it elsewhere easier and make the same amount of money and not have to pay to let the item sit there? That's another thing I like about Mercari. If I want to let an item sit for 6 months, it's not going to cost me anything to do it. Kent, I was just going to say Kent, I can't pronounce that last name. Then Bounce. Okay, Charlie Hustle, I do like the sales. Slowly though, I am bouncing. Let me see what else we got here. There will always be faster, easier, cheaper. There will be, but will there always be a market for that faster, easier, cheaper alternative? We've seen so many other sites. Look at eCrater, for instance. We were talking about them this last Sunday. 100,000 active stores, 1.5 million products within their inventory, and a site that's been around since 2004. The site even had an Alexa rank at one point of, 14,000 or 40,000. So it was a highly ranked site at one point in time. And today the volume is pretty bad. Even look at Bonanza, for instance. Okay. One of our admins here was stating that he has all of his inventory from eBay listed on Bonanza, cost him nothing to have it up there. He gets one sale per year. So when we talk about competitors, we're talking about valid competitors. eBay's real competitors, Amazon, Etsy, Posh, Mercari, who are capable of yanking in numbers. We're not talking about sites like eCrater and Ruby Lane and PG and stuff that just doesn't have any weight to it. Let's take a look at some of the rest of these. Appreciate the stream. You're welcome, Gray. I appreciate you too. Feel free to drop a donation if you'd like. Slap that super chat. Visit our website. There's a donation button there too if you'd like to support our show. We also do a Patreon thing, patreon.com/Bolorama. You get some really cool perks too if you want to check it out, but I'm not going to try and sell you hard on it today. But if you want to be a part of the smartest community on the internet for resellers, this is really the place to be. Charlie Hustle says, IDK, I don't know. Let me break down these acronyms for you. My ASP, or average sale price on Mercari, is higher than eBay. Whoa. I'm curious what type of items you're selling on Mercari that aren't moving on eBay. We should have a little private talk about that. Uncle Sam will always get his. I'm not saying I hate eBay, but I don't enjoy the listing process. They ask the same questions up to 3 times sometimes. And the worst part about it too is when they ask you that question, if you change one parameter, it might reset the whole thing. Or if you, even if you have like business options, it's still not going to work the way that it's supposed to work. I want to work on this video called the Perfect eBay app, and it's going to have animation and everything, but I am so backed up. Like I said, the website took 30 hours to build this week. So I'm going to take another live look at the eBay stock price, just so you guys know. The stock market did close at the beginning of the phone call, which they did on purpose, but we're seeing some after hours volume. The stock market closed today at 36.21 for eBay, which was actually relatively up, all things considered. I guess there was some anticipation regarding this call, but if you remember correctly, I said myself we were going to see multiple points of decline on this phone call. All the writing was on the wall for that, and I was really interested to see how they kind of spun some of the details. So we closed today at 36.21, and now we're currently at 34.34, down $1.87 a share in after hours. Now we're going to expect to see that number probably fall about another 5% by morning. You can expect it to be a little bit closer to about $32 a share. Now, will it actually open at that price? That's really hard to say, but expect a lot of volume in both directions tomorrow morning. They did use phrases like a value and stating that the eBay stock was a value. And I'll be honest, it is a value, but not when you're buying your shares back at $36.19 a share like they said they were. That was their planned repurchase share buyback price. If they were smart, they would have bought their shares at the price that Elliott Management bought their shares for, which was like $26.50. They shouldn't even be worrying about buying shares right now. They just gave a horrible shareholder presentation. Let the stock, fall, and then they can scoop up a whole bunch of shares when it gets down to $28 a share. And like I said, I pegged this last week before this call even happened. I said you can expect eBay to trade at $28 a share by Q3. That's where I believe that they're going to be at. Lee James says, I bet you $1 trading places. I'm not sure exactly what you mean on that. And Mr. Exquisite says, not a real value. I understand after hours market trading. Just so you guys know, I'm running on a long latency today. Normally we are instant, and I can see your comments right away, but I left a minute-long gap just in case there was any issues with the stream today. So looking over my notes, guys, GMV is down. During the original presentation, Scott Schenkel stated that GMV was down 4%. He didn't notate that that's on a FX neutral basis. GMV is actually down 5% globally, so it's not just here domestically. And they dropped the absolute bombshell. GMV here in America, the gross merchandise volume, or the amount of inventory that eBay is actually selling, is down 9% here domestically. 9% down domestically on the actual GMV, the actual sell through today. It is insane. That is a huge reduction. So if you've seen essentially a flat 10% drop in your sales over the last 3 months, there you go. And this is eBay's biggest time of year. Their Q4 numbers are always their big numbers, and to see that happen, it's a little bit scary. Like I said, we saw a little bit of the writing on the wall, but if they don't pull their heads out of their butts here soon, we're going to start having some problems when it comes to our ability to actually sell products. Fishing and picking. That sounds like a great day, I'll be honest with you, buddy. I woke up this morning and Googled eBay on my phone, and the first hit/ad on Google was Mercari. I've actually had that happen as well, and it'll say, like, looking for an alternative? Shop here. Kent says, bingo, they are not in business to fix pains for any tiny little home sellers. They are, but they aren't, okay? Because those little home sellers are also their little home buyers. I would say that sellers make a majority of their active buyer pool. And they're talking about having consumers that are buying something and leaving. They're getting this disgusting level of churn. And a churn essentially is an acquisition and a loss. So you can have churn within your company where you're spending money on something, trying to turn a profit, and then it's canceling out. Basically what we're seeing happen there, or you hire an employee and then that employee ends up getting fired or quits. That can be considered churn. So they said they're seeing high levels of churn with low ROI, or return on investment, customers. So let's take a look at some of the other things. They blame taxes. I can't blame taxes. I'm sorry. In short-term, state-by-state basis, sure. But look at Amazon, look at Mercari, look at Posh, Etsy. All of them, they all have online sales tax. They blame Brexit for the slowdown over in the UK. The UK's or the European market. I can give a little bit of a nod to Brexit, but I can't fully. Because if we're going to sit here and we're going to blame Brexit for the reason why sales are down in the UK, but we also need to take a look at the fact that right now, thrift is hot in the UK. Okay, we had this long period, and don't get me wrong, it still exists, where there's a lot of people shopping for high fashion. CNBC reported last week, they said as the Brexit event is happening, we're seeing a downturn in consumer spending habits. So people are still spending money actively, but they're going to thrift stores, they're going to boutiques, they're looking for value online, and they're saying that even because of this, that the frugal, thrifted fashion look is actually becoming trendy again. So you can't tell me that the Brexit scenario is the reason why sales are down in the UK. They're down across the board. And then they also said, as far as StubHub GMV being weaker, which I appreciate them reporting on StubHub, even though they have that deal secured with Viago, they said that it was a weak events landscape that caused a 4% or a 2-point reduction from Q3 to Q4 as far as revenue is concerned. Interesting, to say the least. They said that moving forward, though, that their goals are to be able to get more money coming in. They said that their plan to do that is on the back of managed payments. They feel that as we switch everyone over, and Charlie Hustle asked us during the show, everyone will be, it's mandatory that you get on managed payments by this year's eBay Open, which is, I believe, at the end of July. So if you're sitting there thinking, oh, I'll never have to be on managed payments, you will have to be on managed payments. Now, I want to throw this out there right now because I know a lot of people deal with this problem. If you do not have a bank account, okay, which sounds wild if you're already doing eBay business, I do not have a bank account attached to my PayPal. I have found a workaround for this. So if you want to be able to be on managed payments without a traditional bank account, contact our company. Okay, there's the link right over there, bolorama.com. It's essentially free, and we will walk you through as a consulting agent as far as how you can be able to do that as well. But everyone will be required, at a minimum, domestically, to be on managed payments by July of this year. Let's take a look at the comments. Tommy Bernard, I think the bombshell should be non-paying auctions, best offers, promoted listing are all in GMV to inflate it. Take out duplicate accounts and make GMV real numbers and see what the stock does. Yeah. That would be interesting to see how much of the GMV is actually conflated numbers. It'd be good to know. Hello to you, Shazad. Long time no see. Happy to have you back around. Hopefully you've been catching our Sunday episodes as well. Tommy said, I fell asleep after you wore me out and missed your call. I apologize. Ooh, who wore out who? Ooh, spicy. So now the thing is, they want to make the money back on managed payments. We've known this for a long time, that their goals are to make managed payment a $1 billion brand for the company, which is a disgusting amount of money. Now, the thing is, rather than making the money back through managed payments, how about you just fix the damn site? Okay. You make the site work better. You make it better user interface. You try and do what Korea is doing, and you try and attract more buyers. That's my take on it. But overall, StubHub was down too. Pretty much everything was down except for eBay Classifieds. Now, eBay Classifieds is still technically down quarter over quarter. They performed worse in Q4 than they did in Q3, but overall, they still had profitable gains for the company moving forward. Now, they also stated that, oh, I got my notes backwards, don't I? Oh, no, I don't. They also stated that for their downturn, their market in Korea, they said it had to do with Korea's first-party inventory programs, as well as their... They also said that they're losing out due to the loyalty club that the Korea site has. I believe the site is Daibao in Korea, and that site, for the first time, they showed 57% growth. 57% growth in 2019 to pass up eBay in total GMV. They went from eBay had 45.1 million GMV in Korea to Daibao's 45.7 million, I believe it was. So they showed 57% growth. And I'll tell you right now, with insane numbers like that, okay, you will be hearing about the absolute death of eBay Korea within the next 2 years. Mark my word on that now. They are losing traction, and they will simply never get it back. It's game over for them over there. They should, honestly, they should fold up shop and pull that company out now while they have the chance. We saw them do it with India. We've seen them fold up business before. They should do the exact same thing and fold that bad boy up right now. Non-GAAP EPS was up 16 cents. Not too excited about that. They said that they are going to plan up to another $1 billion, or they've done $1 billion in share buyback. I think they're just trying to increase the value of the share. I try not to get too deep into that type of stuff because it's not going to affect us too much. Let's take a look at this really quick. Take a look at some of these comments. Thank you. I would like to avoid adding the old bank account. That is huge. Yes, I have means. Like I said, I personally have a PayPal that is not linked to a bank account. And you guys might thinking I'm pulling your chain. Okay, but I got the notification on the top of my screen every time I log in. It says you need to link this account to a bank account. Not going to do it. And that's the same account that I do all my eBay business through too. So if you're looking to do it in a way that eBay can't reach into a bank account and take your money for some reason, then that's the way to be able to do it. And we're not going to talk about it on air, but reach out to us, okay? They said that each state did show a drop in sales after the addition of sales tax, but they're hoping that in Q1 of Q2 that they're going to start seeing increased velocity in those states that did show the drop. I guess they said that they were able to visibly see the drop, which means we're probably seeing some more stuff like abandoned shopping carts and just overall lower GMV for those areas. And then they also said that the board has already voted for an additional dividend payout of 14 points at some point during 2020, which means we're going to be looking at about 30 points worth of dividend payback. Interesting, though, honestly. They were asked on the topic of how to avoid low ROI on ad spend, and they were asked this question twice. They basically said, like, hey, what's going on? What are you going to do to actually change? We didn't get any answer on that. The only thing that they really gave us is that they said they wanted to reallocate their money into paid search. So not really sure on that. Still would love some color there. They were asked about their sneakers and the how well that has worked. They said that basically there is more first party ads, more buyers, more listings, and an overall improved GMV. But they failed to say whether or not it was a profitable quote unquote experience. And they said they've been currently doing it in 2 markets. I'll be honest with you. Okay. It's probably not going too well, but I don't blame them for trying. If you can get more people to come to the site, if you can get more people to list higher quality items, that's great, okay? But make sure you're getting money somewhere other than promoted listings. I'm actually not a fan of allowing people to work within a very specific category and saying, hey, we're not going to charge you fees to work within that category. I think there's more creative ways to do it. Why not just make it so you can list any amount of shoes for free? Just you want to list 1,000, 10,000 pairs of shoes? Go ahead, list them, and then we'll just charge you. You can even do a reduced GMV or not GMV, a reduced final value fee, FEF. You can knock that down. Let them list unlimited. That'll make the catalog look even better without affecting the company's bottom line nearly as hard because it's not expensive to maintain data on the site, especially with all of it being unstructured. Let me get your comment showing up, buddy. That was blocked right there. They can't keep their website service running better than 60% on a good day. Can't wait to see how great a banking system they can create. Well, the whole thing is being backed by Adyen, so they're very much so hands-off on the banking end of things, but I can assure you there will be some logistical problems moving forward. They are going to subscribe to Coupon Mama on Instagram to save money in their new strategy, I've heard. Yeah, well, whatever they need to do to get more people over. But we're going to talk a little bit more about that here in 1 second. Now, this is the big one. They said, did you notice how they put out the active buyer situation? They said that active buyer growth was 2%. That, when I saw the slide and it said 183 million in Q3, 183 million in Q4, I'm like, where'd you get 2%? And it's 2% growth over the year, I believe, is what they're trying to reflect, or 2% over the 6 months or something. But we actually did not see any movement in buyer growth, the number of new buyers. I really wonder just how small it is. Hold on 1 second, guys. We're having a little stream issue here. Okay, I wonder how small it is. Was there 100,000 new buyers? Was there 500,000 new buyers? I'll tell you right now, it was probably less than 500,000 because I guarantee you, okay, if it was 500,000, they would have put 183.5. they would have said like, hey, we were able to show a very small increase. They might have even lost some. And this leads me into my other question. What is an active buyer? Is it somebody who buys something within the last 12 months? Is it somebody who has bought something ever? Is it somebody who's just created an account? Is it somebody who's bought something in the last month? What is an active buyer? I want to know because that metric's important to me. Is it somebody who has a second account? Okay, these are things that we need to know. But what they've said now is they're not concerned about getting more buyers. They said they're more concerned with getting those existing buyers to spend more money. Isn't this what we've been doing for the last year now? Haven't we tried to figure out how to tap harder into this existing buyer pool? That didn't work. What did you try in 2018? You started giving out coupons like crazy. $5 off this purchase, $10 off this purchase. We had the surge of buyers coming from the fidget spinners. It was great. It was wonderful seeing so much new blood on the site. And they've just openly said, we've tried spending money on getting new buyers, but yeah, these new buyers that we're getting don't really spend anything. And when they do spend something, they buy something once and then they don't stick around. It's not really helping anyone. And now what they're saying, yeah, we just want to tap into those buyers that are already there. And how are they doing that? Well, hopefully via promoted listings. They said 30% of listings now are using promoted. But again, that doesn't give us a clear reflection of how many people have actually signed up for promoted. Because I have an eBay store with 600 items on it. And I'll tell you, probably about 550 of my items have promoted listings on them right now. Because 1%. So what amount of actual buyers actual sellers are actually using promoted? And I think that these little dances and little skirts around the truth are starting to get really tiresome. And I'm curious again what brands like Motley Fool and Hard Money e-commerce bites are going to have to say about this as well. Let's take a look at this really quick. More product equals more buyers. This is true. They will also stay in Holiday Inn Express and get Geico insurance. That's what I said. Nice one. They also never mentioned duplicate and inactive accounts, all smoke and mirrors. And this is something that I've been concerned with for a while. I have 4 accounts alone and 2 newly created ones. I shouldn't count into that. I have 2 accounts myself as well, and I don't want my second account to be considered an active buyer account. It's not. It's a seller account. And I wonder what would happen if we just got more clear specifics on the number of actual sellers as well as the number of active domestic sellers. Because I don't know who these people are who are selling new things, but they're not here in America. Okay. I don't know anyone personally who is selling exclusively brand new sealed on eBay. They're doing it on Amazon. They're doing it, even drop shipping it through like a Shopify or through, just their own personal website. I don't know anyone selling brand new on eBay, and they're telling me that 80% of the inventory on eBay right now is brand new product. Okay, it's not coming from America, it's coming from overseas. And unfortunately, too much of it is low quality garbage that no one wants, and it's clogging up the ecosystem for people like me and you who are actually looking for good items, and guess what? We can't find them. Okay? The real moment is going to come when people like me start searching on Mercari first for something that I'm looking for. That's going to be the big tipping point when I start someplace else first, because I'm going to get a better value and my money's already in there. I'm just kind of shuffling it around. It's going to be interesting to see. And all the foreigners on our platform. Yep. Let's take a look a little bit further. Now, they also made another statement too. They said that in Korea, they are doing managed payments, they're doing promoted listings as well. And they said the adaptation of it is very strong, but they said they are at a different take rate. Okay. And I don't know what they meant by that. I don't know if they meant that they're charging different for the way that people are doing promoted listings in Korea, but I'm going to try and get with with somebody that's capable of gaining access to the Korea site. Those of you who don't know, eBay has locked down a lot of their international websites. I can't gain access to the terms of service over in eBay China right now, or even ebay.hk, the Hong Kong site. You have to have a registered account within that country to be able to access the website. So when it comes to me, even using an ISP, or not an ISP, a proxy, Okay. I still can't access the websites and see the terms of services over there because they don't want people like me reading and learning that in China you get unlimited free listings. It's kind of something that they don't want everyone to know. So I'm curious what they're doing in Korea as far as their promoted listings and how that offering differs there, how they're doing a different take rate than what they're doing here in America. They also mentioned, too, that display ads are less impactful on mobile, and they said that it will work itself out over time. Yes, thank you, a VPN, virtual private network. Yeah, and I don't understand how it's just going to work itself out over time. If the ads don't display well, if your little sponsored listings don't look great and people just flick past them every time they do a search on mobile, just like I do, and we flick past the little banner ads, I don't know how you're just going to fix that. It doesn't make any sense to me. So... And then they mentioned that they're going to be adding Royal Mail tracking. Yeah. That's about it, guys. Do you have any questions for me? I mean, that was an interesting shareholder call. A lot of little details to cover. And like I said, we're going to have full extended coverage this Sunday. Thank you to Patty for subscribing to our channel. We appreciate it. We're going to have extended coverage this Sunday. We're going to be covering pickups, items that I got on the week as well. We're going to be covering any other relevant news, but I mean, this is pretty much going to be the bulk of the news for the week. Let's go and take one more look at eBay's after-hour share prices, and then Mr. Exquisite can yell at me as far as how it's not accurate. Looking like they're showing $1.86 down again still. It's going to be interesting to see what happens. I'm very curious to see where we open up at tomorrow. Guys, I think that might be it for me. I think I'm going to go make a sandwich or something. But if you've enjoyed this stream, I got to stress it again. Subscribe to the channel. This is the most advanced YouTube channel on the topic of eBay, Amazon, Etsy, Posh, Mercari. We cover everything that you're going to need to know in the world of reselling. This is the place to be if you care about fact-based, intelligible conversation. And, you know, or even if you're just an everyday seller just like me, okay, I sell dumb stuff online all day long. We're a great, casual, fun community to be a part of. Join our Facebook group. It's completely free. Facebook.com/groups/Bolorama. BOLORAMA. Go check us out. And Bolorama.com, our brand new website. Guys, it's an awesome website. You're not going to believe how nice this is. We just finished making it this last week, okay? And I'll tell you what, if you think my site is ugly, I'll give you a free t-shirt. Okay, that's how confident I am in my site. There's tons of free resources on there as well. Free training videos, reseller roundup on demand, all kinds of goody stuff on our website. Go check it out. Thanks so much for watching. Thanks so much for being here. And if you enjoy this stream, let some other people know. Let them know about it. And I'll play some outro music for us. Will it work? Here, I'll even show you. This is what our main page looks like. Thank you to our patrons who help make this show possible. Let's do this, and we'll play some outro music. Guys, have a great one, okay? I will talk with you here soon.